Hey everyone, happy Tuesday. Guess who it is? That's right, it's your girl, hashtag JLoan in the building, coming at you with another Mortgage Tip Tuesday. That's right, you know it, another Tuesday, another tip. And today, before we get into our mortgage tip, I want to talk about what today is. Today, March 7th, is National Be Heard Day. And this day really celebrates small business owners and encourages them to stand up for themselves and their ideas and take this day to really draft out your business plan and set the platform to get your ideas heard around the world. And so while we were on that topic is why my subject today is going to be on self-employed borrowers, okay? And I want to talk to you not just in regards to, hey, it's tax time, right? And what's going to happen when you file your tax returns. It's very important for you to know as a business owner, what do you need to qualify for a mortgage traditionally, okay? And I'm going to say traditionally because there are programs out there that will help self-employed borrowers in non-traditional ways, such as not having to provide tax returns and all the documents that have to come with that, but doing things like bank statement loans. And I won't get into that today. I'm going to talk about traditionally only, but if you want to know about the non-traditional options, I can go through those with you, but typically those are going to require more money down, 20 to 30% down, and higher credit score requirements, and your interest rate will be higher than traditionally. So it's very important for me to try to get you into the best option, and the way that we can get you there is if we prepare you beforehand. So again, it is tax time, and so it's very important that when I get to the end, I explain to you what we look at here as a lender, okay? So number one most important thing, if you want to use your self-employed income, and you could be self-employed as a whole, meaning you have your own business, or a lot of times now, people are working for your DoorDashes, your Ubers, and all of those other side jobs that are helping you get money, and you want to use it to qualify, but you can't, and here's the reason why. One, because you have to be self-employed for 2 years. All right, so you cannot use self-employed income if you've only been there for 6 months, okay? Regardless if you're making $10,000 a month, you can't use that income unless you've been there for 2 years. And most of the time, this works non-traditionally as well, that they will require that you've been on or had that job for 2 years, okay? Number two, you must have filed 2 years tax returns. So being self-employed is one thing, but if you do not claim that money to the IRS, we do not see that money. Okay, so it's very important for you to file your tax returns so that we can use that as income. And again, at the end, I will show you how we calculate your income. All right. And then three, a profit and loss statement for the current year. So depending, everybody has to do their taxes. Most times they're due April 15th of that current year. So once that time has come about, we'll actually have your income for 2022. And so your profit and loss statement will just be needed from January 1st through the date of the tax return, or the most recent month in which you're going to close, is what we will need. Now, if you are one of those who file your business tax returns on October 15th, which is that extended date that you're allowed, then you would actually need a profit and loss statement for the whole 2022. So January 1st of 2022, or whatever the last year is, because depending on when you're watching this video. So whatever the last year is, that whole year, and then your current year, January 1st through the end of the most recent current month. This is just where you're saying, hey, this is how much income I brought in, this is all my expenses, and this is what I've netted per month. Again, most of the time, this doesn't have to be done by a CPA. This is done by you, or you can print it from your QuickBooks or whatever accounting system you're using to track your income and your losses. All right. Number four, you're going to need your bank statements. This is for everyone, self-employed or not. You need your bank statements for the most recent 2 months. If you have business bank statements, that's a plus, but it's not always required. Even though I do recommend, if you have a business, if you have your own LLC, you have anything, create a separate account separate from your personal, just because it's easier to track your business from your personal, and try not to commingle that money. So transferring personal money into your business. Now you can transfer business money into your personal, but try not to do it the other way around, okay? It causes confusion, and sometimes it can cause that income not to be counted. So just be careful on that, okay? And then typically 10 days before you close, we need proof that your business, that you're still in business, or that the business is profitable. And this can be by your website, recent pay stubs, business receipts, executed contract, just something that shows that you're still doing it. Because we do live in a world that people believe that once you're qualified, they can quit their jobs. You cannot do that at any point in time, especially when you're self-employed. So even after COVID, when things got a lot more strict, it's really important for you to keep your positions, because not only they're going to help you pay your mortgage, it's the right thing to do, okay? And so now I want to talk a little bit, and I didn't write it because I wanted to kind of do it with you. So when you file your tax returns, you either can file a separate business return depending on your entity, but most people will file what is called a Schedule C. So if you do anything on the side, if you're Ubering, door dashing, whatever it is that you're doing on the side that you're not receiving W-2 income for, you will claim that on what is called your Schedule C on your tax returns. And when you do that, you're going to put the type of business that you have, and then you're going to put your gross receipts at the top. This is how much money you have brought in, or whatever's on your 1099. Well, the benefit of being self-employed is because you're 1099, you pay taxes at the end. So most CPAs will try to give you the best benefit so that you are not paying tons of taxes on that income. But what you have to keep in mind is all the boxes in between that talk about meal plans and your supplies and all these write-offs that you'll have in between. Those get deducted from what you claim your gross receipts are. Well, lenders use the bottom number, the number that you're actually paying taxes on. So if that says a negative, then guess what? You show that you made no money and you actually took a loss. If you show some money, then what we will do with that is that counts as income, but we look at 2 years, okay? So the way it works is, and I'm gonna say last year. So let's say last year, you showed a loss of $1,000. Of course, I'm gonna use easy numbers, right? And then this year, current year, right? Well, I hate to say current year. So 2 years before the current year, okay? So then your current taxes, okay? You showed a profit of $8,000, okay? So most people will think, well, hey, we're gonna use that $8,000. Well, that's not how it works. We will combine the two of these together to now this 2-year average equals $7,000, okay? But lenders are smart, okay? We go in the reverse. If your last year showed a positive 8,000, and then your current, this is scenario 2, and then your current shows positive 6,000, well, now we're not averaging the 2 years, okay? Because your current taxes show that you took a loss. One, we're gonna wanna know why. And then if we determine that it's okay, let's say a year like COVID happened, then we'll take this 1 year and we'll divide by 12. Okay? So we won't take 14 and divide it by 24. We're gonna take the lowest year to us. So Gets a little complicated. You don't have to do this on your own. That's why I'm here, right? This is just to give you the basis to really help you to understand how it works and what is needed. You don't have to calculate this on your own, all right? If you even don't want to fill out an application and you just want to say, hey, can you tell me what my income shows currently? Or, hey, I'm about to go do my tax returns and I just kind of know where I stand now. I can't tell you what to claim, but I can tell you what we see on what you've already showing on your tax returns. And then I feel like it's very important for you to have open communication with your CPA in the years leading up to you wanting to buy a home, to tell them that, hey, I'm looking to buy a home in the next 2 years. So I don't want to write off a huge amount of deductions because I want to buy a home and I need the most amount of income. So keep that open communication. I always say you have got to be truthful because it's very hard to backtrack once information is already set out into our eyes, or once it's already claimed with the IRS, it's very hard for you to backtrack that. So do it the right way. And I'm not saying writing off is the bad way. I'm saying if you want to buy a house, you want to show the maximum amount of income so that you qualify for what you want. And what I've seen over my 17 years of doing this is that you show great gross receipts, but then at the bottom of it, you show losses or you show very, very little income. So whereas truly we know, hey, you're making money, we just can't prove it on paper. So if you don't want to do non-traditional loans with higher interest rates and more money down, you're going to want to try to do the traditional steps that are necessary to get you to home ownership, okay? So if you feel this video is helpful, as always, click like, comment on it, and of course share it. It is tax time and a ton of people are filing their taxes right now. So you can help them because if they're looking to buy a home in the next year to 2 years, they're going to need this information. So please like, comment, and share the video. And as always, if I can help you with your next home loan, anybody, you, your friends, your family, your business partners, please reach out and call me, 817-601-5456. It's your girl, #JLoan. Talk to you next Tuesday. Bye-bye.